7 pearls of ancient wisdom from Confucius for property investors, some quotes from Steve Jobs and Winston Churchill, and why you can't count on the government to look after your future, but what you could do about it instead. That's what we're going to discuss today.
Are you interested in property investing, success or money? Well, you're in the right place. This is the Michael Yardney podcast, where each week you'll learn a number of new ideas regarding success, property investment and money in 20 minutes or less. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, who has once again been voted Australia's leading property investment advisor. That's the 4th time he's won a similar award in the last 6 years.
Welcome to another show. And I'd like to say thank you to all the listeners because we are regularly ranking as number 1 in property investment in iTunes and consistently ranking well in the top 100 of all podcasts on iTunes. Now, we're not beating Oprah Winfrey, who's number 1, but it's inspiring me to keep giving you great content every week about how to become successful in all areas of your life, but particularly with regard to property investment and money. And we're going to continue on today to gain some knowledge from some ancient Chinese wisdom. I'm going to share some quotes from Steve Jobs and Winston Churchill that inspire me. I hope that's going to do the same for you. And my guest again is Pete Wargent, who's going to explain to us why we can't count on the government to look after us in the future, but what smart money things we can do as property investors to secure our financial future. Confucius say property investors looking to create wealth from real estate can learn much from ancient Chinese proverbs. Oh, look, okay, I'm probably not quoting Confucius verbatim. However, the teachings of the ancient Chinese philosophers still ring true in today's very different, very modern world, and they've really got a clear application when it comes to the business of real estate investment. And today's show of the Michael Yardney podcast is going to be concentrating on the Asian century because in a short while I'm going to be having a chat with Pete Wargent, who's going to teach us a bit about how to take advantage of the changes that are going to happen in the Asian century. But maybe in this first segment, I'm going to combine my mindset moment together with my property lessons because property investors who understand the importance of mindset and how much impact it plays on their wealth creation journey are going to actually get quite some insight from the following Chinese proverbs. So let's look at a handful. Sow a thought, reap an action. Sow an action, reap a habit. Sow a habit, reap a character. Sow a character, reap a destiny. Now that's a long one, isn't it? But I've found that your level of wealth will seldom exceed your own personal development. That's because the way you think about money, wealth, prosperity is going to determine the financial heights you reach. You see, your thoughts lead to your feelings lead to your actions, and your actions lead to your results. I guess what I'm trying to say is that your inner world, your thoughts and your feelings are going to determine your outer world, your results and your destiny. So what I got out of that proverb is you first work on yourself because your wealth won't grow unless you do. And if perchance you do happen to stumble across a financial windfall, you end up with a good property deal, the market works in your favour, you get a lottery, win an inheritance, whatever. If your wealth does take a lucky jump, unless you grow out to where it is, it's actually going to go back to where you are because it's very likely you're going to lose your money through a mistake or through mismanagement. Okay, let's look at another Chinese proverb. He who asks is a fool for 5 minutes, but he who doesn't ask remains a fool forever. Now that's a good one because one of the big mistakes beginning investors make is to think that they can do everything themselves. They do a little bit of research, they crunch some numbers, and suddenly they're industry experts. And of course, you can't tell them anything because they know it all. As I frequently say, if you're the smartest person in the room, you're in the wrong room. So recognize the areas where you need help and don't be afraid to ask. Don't be afraid to seek out advice of experts. There are no foolish questions, just foolish people who are reluctant to ask questions. Oh, one more thing. Look, don't be put off because a learning opportunity costs money. We all pay learning fees. You're either going to pay it to someone who's going to help you or to the market because your mistakes usually end up being very expensive. Okay, the next Chinese proverb: a single conversation with a wise man is better than 10 years of study. Now that fits in with my concept of having a mentor, because finding a mentor in my mind is the fast track to acquiring the type of property investment insights that can never be found in a book. So my advice is to seek out mentors who've already achieved the goals that you aspire to by successfully investing through a number of property cycles. But just as importantly, people who've managed to retain their wealth. Now, if you're interested in having me as your mentor, I've mentored over 2,000 people in the last decade. Go to michaelyardney.com.au, and find out all about my mentorship program. Okay, the next proverb is one mouse dropping ruins the whole pot of porridge. I guess what they're saying is one bad asset can be the proverbial fly in the ointment that holds back your portfolio's overall growth. The message to me is review your property portfolio regularly. If you find a property that, knowing what you know now, you wouldn't have bought it again in the future, that's your mouse dropping, I guess. Fix up your porridge. Get rid of that underperforming property. Move forward. A couple more Chinese sayings. A single spark can start a fire that burns your entire house down. What I'm learning from this is that every year, unforeseen X factors come out of the blue to test us. So look forward to the best of times, but be prepared for the worst. Protect yourself and your portfolio against unforeseen crises. Look, it could be a personal one. It could be something like getting ill or losing your job, or something on a larger scale. So ensure yourself as well as your assets, and maintain a financial buffer that you can dip into if the need arises. The second last proverb I'd like to share with you today is, don't be afraid of growing slowly, be afraid only of standing still. This reminds me that sustainable wealth creation through property investment isn't a process you can rush. It takes time for the magic of compounding and leverage to work. Self-made billionaire Warren Buffett put it a different way. He said, wealth is the transfer of money from the impatient to the patient. And let's look at the one more, maybe the seventh pearl of ancient wisdom today. The best time to plant a tree was 20 years ago. The second best time is now. I guess I'm learning from that it's never too late to get into the property game. Sure, it would have been nice to do it when median prices of houses are $100,000. But interestingly, and I remember when that happened about 20 years ago, house prices were very expensive, or seemed very, very expensive to us investors then. The best time to plant a tree was 20 years ago. The second best time is now. There are always opportunities in the property markets. There are opportunities today too. The sooner you start, the sooner you're on track to reaping long-term riches. So there you have it. 7 pearls of ancient wisdom for success, and some of the messages I learned from that. I'll be back in a moment with some lessons from Steve Jobs and Winston Churchill, and then I'm going to have a chat with Pete Wargent and understand why he thinks we can't count on the government to look after our future, but what we can do instead.
If you're looking to get started in property or to grow your existing portfolio, turn to someone you can trust for independent advice. The team at Metropole Property Strategists have been involved in over $2 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au. Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
If you're a regular listener to my podcast, you know I share motivational messages because I believe the only way to get to the next level in your property investment or your business or anything in life is to upgrade your mindset, to think like the successful people, to develop rich habits. And today I'd like to share a quote from Steve Jobs. He said, "I'm convinced that about half of what separates successful entrepreneurs from the non-successful ones is pure perseverance. You've got to have an idea or a problem or a wrong that you want to right, that you're passionate about. Otherwise, you're not going to have the perseverance to stick it through. Now, I heard this Steve Jobs quote after having some difficult times in my life. And it was fascinating to hear how his concept said that it's your vision that pulls you through. Because yes, things will go wrong. Life will throw you curveballs. You've got to get up one more time. Another one of my favourite quotes from Steve Jobs is, if you're working on something that's exciting, that you really care about, that you don't have to be pushed, that vision is going to pull you through. This is so true. And it's what I tend to call positive passion. From my experience, when you're working on a positive passion project, you get into a zone that naturally eliminates overthinking. Obstacles are removed because you're organically thinking outside the box, driving behind your own limited capacity and expanding your brain power. When in this zone, I know I'm able to get the right people around me to assist me to achieve my goals. Remember, just like Steve Jobs, become a visionary. Have your own inspiration, get the right people around you, and be persistent and persevere, whether it's in property investment, in your business, in other elements of your life. It's those people who persevere who succeed. Now, interestingly, Winston Churchill said something different. I actually got interested in him recently as I watched that TV show, The Crown, on Netflix, and Winston Churchill said, "Success is not final, failure is not fatal, it's the courage to continue that counts." Now that's actually interesting. It's a similar theme, isn't it? Because look, let's be blunt, we all have successes and failures in our life. What matters is how we continue to grow after each success and improve ourselves after each failure. It takes courage and determination to pick yourself up after a setback, but knowing that you're going to overcome your obstacles through self-belief is the key. You never want to get too comfortable. When you do, you're no longer growing and you're no longer winning. There are two great thoughts and quotes from Steve Jobs and Winston Churchill for today's mindset moment.
If you're enjoying our show, please subscribe on iTunes. You'll find us there as Michael Yardney Podcast, and we'd really appreciate it if you would leave us a review. When you do, we'll read it out on the show. By the way, Michael creates a lot of content he only sends out by email, which you can have with no obligation. So also visit michaelyardneypodcast.com and subscribe to his commentary there.
If you're listening to this podcast, you're probably interested in property investment, in success, in money. But interestingly, most Australians don't invest. There's only 2 million property investors in Australia out of the whole total adult population. And there's lots of reasons why they don't invest. Sometimes it's lack of knowledge, a feeling of intimidation. Sometimes life just gets in the way. But I hope you understand the importance of taking a long-term perspective and investing for your future, because the government's not going to look after you. That's one of the areas I want to talk today with Pete Wargent about. Pete Wargent is a chartered accountant, a chartered secretary, and has a financial planning diploma. But he's not a theorist. He's achieved financial freedom at the age of 33, and he's written a number of books and regularly blogs at Property Update. So I wanted to pick his brains on this topic. Hi, Pete.
Hi, Michael.
Now, one of the things I've noticed amongst most Australians is they don't have a long-term perspective. They don't start investing. They either never think about it or life gets in the way. In your opinion, why should people invest for the future?
Yeah, well, if you're looking at the longer term, Australians are actually living longer in retirement on average than they used to. So superannuation balances are not likely to be enough on average for most people. So it's potentially a pension time bomb we're looking at. And more broadly, why invest for the future? It's the freedom to choose whether to work or not, or whether to start your own business.
Well, clearly, Pete, the superannuation that the government's offering us isn't going to be enough. I recently read some statistics that the average female has less in their superannuation than males, and even males are only going to have around $260,000, $280,000 in today's dollar value. In 30 years' time, 20 years' time, when people retire, what's that going to buy them? How long is that going to last them? And I don't know that the government's going to be able to keep affording to pay pensions because they're lifting the retirement age, aren't they?
Yes, that's right. I mean, the Association of Super Funds recommends a balance of just over $500,000, but in reality, for a lot of people, that's likely to be nowhere near enough, and most will face a shortfall. I mean, if you live to 65 today, you could reasonably expect to live for at least a couple of decades and possibly more for females. And so people will be working for longer or, as you said, taking the age pension, which is a paltry sum.
Sure. When you speak to people and ask, well, how much do they want in retirement or how much they think they're going to need, they often don't know. And they think they're going to get away with less than during their working days. But in general, Pete, that doesn't work that well. And as I often jokingly say, dog food doesn't taste too good in retirement, does it?
No, that's very true. And with the cost of healthcare and rent in some capital cities rising, the dollar value sum in the future could be much higher than you think.
So, Pete, how can you do better than the average Australian?
Well, I think for people who are more established investors, it's easy to forget that it is hard when you're starting out, especially for young people and especially in Sydney, where even renting can be relatively expensive. But you've got to start with spending less than you earn and investing now and using time as your friend, so using the power of compound growth. But that said, it's never too late to start either.
Oh, I fully agree with that. So that's one other complaint. People say, oh, it's too late now. No, it's not. What's the alternative? But I think people have got an unrealistic expectation because I bet you get the same emails in your inbox that I do of, I'll buy 7 properties in 7 minutes or 10 properties in 10 years. How long does it take to achieve financial freedom, Pete?
Yeah, I think, there are a number of variables, but I think 15 years is a realistic time frame to generate a big enough balance of net assets that's big enough to generate the passive income you need for a comfortable retirement. Obviously, you can do these things more quickly or more slowly, and it can be done sooner sometimes using more leverage. Obviously, things market timing and good strategy and good asset selection can help, but realistically, 15 years, that's the kind of time frame that financial freedom can be achieved over.
Well, Pete, I think what your comment a moment ago, you glossed over the concept that you really need to build an asset base, and that takes time. And that could be through property, it could be through shares, it could be through businesses, but it takes time to build an asset base. So it's not how many properties you've got or how big your share portfolio is, it's the size of your assets and how hard they're working for you. So actually, I just discussed a couple of different options, Pete. Any particular preferences, property, shares, business? Because that's really about all you can do, isn't it?
Yeah, those are the 3 main vehicles that people use to build their asset base or build their wealth. I think ideally you would have a balance of all asset classes. You'd have some property investments, some shares probably in your super, and also potentially start your own business as you progress. I think that said, though, people often do find that they have a natural preference for either for shares or for property, and I think sometimes people are dictated more by a natural preference as much as anything else.
Look, I agree with you, and I am biased towards property because it works for me, and I know you have actually got a much better blend because I know you've done very, very well in the share market because you understand that. So I think if anyone says to you it has to be just property or just shares or just managed funds, you should run away very quickly because they probably are overly biased, aren't they?
Yeah, you've got to look at the advice you get. You've got to look at most people have a natural bias for certain asset classes, and you've got to really just do what works best for you. But the most important thing is to get started and just to use that power of compounding, which over time can be extremely powerful.
Well, I guess to get it in the 15 years you mentioned, Pete, you've first of all got to not make all the mistakes most investors make, because I've found many investors, particularly in property, spend the first 5 or 10 years learning what not to do, and they've wasted all that time, and then they've got to start all over again when they unravel it. So if you get the right mentors, or if you learn the right systems and you follow a plan, you're more likely to get there in that time frame. So Pete, where do people find out more about this? How do they get going?
Well, it'd be remiss of me not to mention information sites such as Property Update, which you've been running for many years now and educated so many Australians. And I've been a proud contributor to that site as well. But as you mentioned, we're running a seminar in Sydney on October the 7th. That's a Saturday. That's the Money for Life seminar. We've got 5 highly respected speakers in their respective fields. We've got Stephen Koukoulas, economist.
He's a great economist, isn't he? Now, that doesn't mean you're not, but he's bringing another perspective too. That's great, Pete. I'm glad you got him there.
Yeah, he's a very personable presenter, Stephen. You may have seen him on the project. But we've also got David Novak, who's a share market professional. We've also got Melissa Brown, who's an accountant and financial advisor and tax expert. And Chris Bates, who's also a financial advisor and mortgage broker, who's going to give some great superannuation strategies that people can use. So we're really covering the full gamut there. And it's a one-day workshop where people can come along. And
you, Pete, you left out the most important speaker, you.
Well, that's right. You talked about the bias for property or shares. I mean, I have a personal belief that the young people, they should use the capacity to borrow when they're young, because they've got time on their side, and then you can use that property that you buy as leverage down the track for leveraging into other assets. So I will be talking a bit about the Sydney property market and the great challenges that face young people in Sydney from an affordability perspective, because it's not just expensive to buy in Sydney, it's also now expensive to rent in many areas. So I'm going to address some of these strategies that people can use to tackle that.
So how do people find out about the seminar, Pete? Where do they go? How do they book in?
Easiest place, just come to my blog page. So it's petewargent.blogspot.com, or the Money for Life website is at quadrant2.net.
Well, Pete, I'm also going to put a link at the bottom of this podcast so it makes it really easy for people, because they probably won't remember what you said. Thank you very much, Pete. So the simple answer is, if you want to enjoy your golden years, you've got to plan for it many, many years ahead. Thanks, Pete. I look forward to you being a guest again on my podcast.
Always a pleasure, Michael. Thanks.
Well, that's the show for this week. Thanks for joining me again. I hope you got something from Confucius, from Steve Jobs and Winston Churchill, and also some hints from Pete Wargent. I look forward to catching up with you again next week.
Thanks for listening to this week's episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from listening to this podcast, please leave us a review and we'll read it out on a future show. Just go to michaelyardneypodcast.com/review and it will take you over to iTunes, where you can enter a review and let us know what you think. We'd really appreciate it. If you don't already subscribe on iTunes or on your Android phone, you'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes or a transcript of the show, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 20 minutes.